morning, everyone. Welcome to our session on Paper-1 accounting for intermediate level. So, in the last class, we were talking about property, plant and equipment, and we have covered almost everything of property, plant and equipment, including what goes under cost, what is property, plant and equipment, what is the definition of property, plant and equipment, what happens with the depreciation, what happens in subsequent recognition or subsequent measurement, whether we keep it at cost, we keep it at revaluation reserve. We have discussed everything. The only part which was left was the last bit, which was talking about disclosure. So I thought I'll just quickly discuss disclosure here and move on to our next topic for today. So if I talk about disclosures, so what disclosures it talks about? What we need to disclose? We need to disclose everything, whatever we have discussed in property, plant and equipment. We need to give a separate note, right, for fixed assets, which talks about that what is the reconciliation of all the types of property, plant and asset. We create a note where all these assets have been categorized as per their right. So if you remember, different classes were there. So all these assets were categorized as per their class, right? So land and building, plant and machinery, other equipments, all these assets has to be categorized. And in that, what we need to do, we need to show what is the addition which we have, any asset retired during the year, any acquisition happened of the asset through business combination. Instead, I acquired the asset directly. I acquired a business which was having couple of assets, so those assets got added. Any increase or decrease resulting from revaluation or any impairment loss which has happened. Any impairment loss which has been recognized in profit and loss account. Any impairment loss which is reversed, and at large depreciation. So it means that note will talk about the value which was there in the last year, means opening balance, and how the opening balance has changed to the closing balance by adding or by showing all these addition, deletion, depreciation, impairment and everything. Apart from that, what all we need to disclose? We need to disclose what is the measurement basis we have, whether we are following the cost model or the revaluation model. What is the depreciation method we are following, whether straight line, written down value or any other method. What is the useful life or the rate, depreciation rate which we have used? Is there any change in the useful life or depreciation rate which has been used? What is the amount, total amount, which is the carrying value of the asset and accumulated depreciation? That was the disclosure which we need to give every time. There are certain additional disclosures which are only required when the situation comes up. For example, I have pledged my asset in the bank against a loan which I have taken from the bank. Right? Any amount of expenditure which is in the course of construction, for example, capital work in progress, CWIP. If any CWIP is there, that we also need to disclose that how much we have already incurred, because that is also going to be added in the value of property, plant and equipment block. So amount of contractual commitment, any asset which we have already ordered, is still to add or still to come, right? So all these things we have to disclose, and there are certain disclosures which are specifically related to revaluation of the asset. If we revalue the asset, only then we have to disclose. Otherwise, no disclosure is required. And these are on which date the revaluation happened. When we revalued, independent valuer was involved or not. Because for fair valuation, as per the guidance, every time where the valuation is required, fair valuation is required, we need to have or we need to involve the independent third party valuer for that. What were the methods? Significant assumption applied in estimating the fair value means how you derive the fair value, how valuer has derived the fair value, whether it is market linked fair value, for example, in real estate, circle rate could be the base. It could be that the property next to me has been sold just recently, so I can take the price from there, right? And what is the revaluation surplus which we have for the period, and any restriction on the distribution balance to shareholder. That's something we are going to disclose, right? So can we share that revaluation surplus as dividend or not? So all these things are the disclosure. So we are done with this, right? This was the pending part. I'll move on to our next topic, which is borrowing cost. But before we get into the borrowing cost, I'll just take a couple of queries here related to this. Difference between carrying value and fair value. So carrying value is the amount which is there in the balance sheet, whereas fair value is the amount which is the estimated value linked to the market. Means what is the value in the market or something available, or today what is the relevant value there in the market, right? So that something is the fair value, where the carrying value is the book value, which you have recorded in the books. Site dismantlement. So dismantling cost, Sakshi, I guess you are asking. So dismantling cost, you can consider there are two types of dismantling cost could be there. One, you purchase, let's assume you want to construct a house for yourself. You are looking for a plot. You have identified that a plot is there which you want to buy, but that plot already has two floors which you don't want to keep. You want a new house, newly constructed house. So what would you do if you have that old two floors? So you will demolish those old two floors and then build a new building from there. When you demolish, that is known as that you are preparing the site. So that is the site preparation. You are preparing the site for the construction of the asset, construction of the building. If you won't do that, you will not be able to construct the new building. So that dismantling of the old structure get added in the value of asset. Whereas other dismantling cost is, which is we call decommissioning. That we will dismantle the asset which you are building or you are constructing. We will dismantle the asset after the end of the useful life. It means that once the useful life is over, we will dismantle that piece also which you are constructing right now. That responsibility is on you. So it means that both the costs are required cost, and both the cost, whether you are dismantling the old structure which was already there, or you have to dismantle your own structure at the end of the useful life, both are going to get added in the value of asset. The only thing is the amount or the dismantling which you are doing to your own building at the end of the useful life. For that you have to add the present value, not the full value. I hope we have answered all the questions of property, plant and equipment related item. Any question you have, you can still ask. Now let's move on to the AS16 borrowing cost. So before I jump onto the borrowing cost, I would just like to talk about that in AS2 inventory, Harika, AS11 would be part of it. We will be moving on to AS11 also. But AS16 is directly related to the property, plant and equipment and inventory, which we have already covered. So that is the reason. So dismantling gives income, that will not cover until dismantle is done. Right? We will not talk about the future income we are going to. Now, in AS2 inventory and AS10, right? AS2 inventory and AS10 has, right, property, plant and equipment. Has some guidance related to borrowing cost. Right? Has some guidance related to borrowing cost. The guidance which was there in AS2 and AS10, that is mentioned under AS16. So what exactly it says? Borrowing cost related to. So first of all, please tell me what is the meaning of the borrowing cost. Please answer till the time I discuss this thing. Borrowing cost related to construction, or I would say related to inventory and so borrowing cost related to inventory and property, plant and equipment will get added to the value of asset. Now I just talk about one example here. XYZ has taken a loan of rupees 1 crore right? XYZ has taken a loan of rupees 1 crore right? XYZ has taken a loan of rupees 1 crore to construct a building, right? So I'll just put the right one. To construct a building. XYZ is going to incur interest on loan at 10% interest rate. So every year, how much interest they are going to bear? Every year, how much interest would be there? What would be the interest which XYZ has to pay? XYZ has to pay the interest of 10 lakh rupees. So I have taken a loan of 1 crore rupees. On that, I am incurring an interest of 10 lakh rupees. Now, can this interest be treated as directly attributable cost? Or I can say a required expense which should be added to the value of asset. Right? Here we have loan which we are paying. Can we consider this loan as an directly attributable expenses or not? If it is directly attributable, it means it should get added in the value of asset. This 10 lakh, instead of going to profit and loss account, it will be added in the property, plant and equipment value. Can it be done? For that, I would say yes. It can be done. It can be treated as directly attributable expenses and will be added in the value of asset. But only in that case when it satisfies the criteria for capitalization. Now, what is the criteria? That's something we will discuss. So let me just talk up first, read all the things which everybody has mentioned. That everyone has mentioned borrowing cost is nothing but cost related to financing, which is interest on borrowing. Right? All debts by company used for the purpose of inventory. So I would say this loan which I have taken will not be the borrowing cost, because this loan in any case is getting added in the value of asset. I have taken the loan for this. The borrowing cost is actually the cost which I am paying for taking the borrowing, right? For taking the borrowing. So all those costs will be added. So some people have mentioned, right? So have mentioned all these the cost which could be related to the borrowing cost, like interest cost, exchange differences on the interest cost if I have taken the loan outside India, right? So that's something we have got here. So AS16 talks about, can those interest or can those borrowing costs be added in the value of asset? Answer is yes, but only and only when the criteria are met. So it talks about accounting for, so objective is accounting for borrowing cost. Those borrowing costs which meets the criteria, right? So borrowing cost, those borrowing cost which meets criteria will be added to the asset value. Whereas certain costs which don't meet criteria will not be added to the asset value. If it is not going to be added to the asset value, then it means it will be charged off to profit and loss account. So directly attributable means something which is required, right? Without which or without that your asset will not be completed, right? Without that your asset will not be completed. So it should be directly attributable expenses only, and it should also meet the criteria. Now, if I just ask you, right, so directly attributable, let me just give one very, very specific example. let's say I want to construct a house which will cost me rupees 2 crore. I want to construct the house which will cost me 2 crore. I have 50 lakhs with me. Now, from where rest of the amount will come? Right? From where rest of the amount will come? The rest of the amount will come loan or borrowings. The rest of the amount will come from loan or borrowing. Now my question is, if I don't take this loan, can I construct my house? If I don't take this loan, can I construct my house? Answer is no. If you want to construct the house, you have to take this loan. So we can say it is directly attributable. I cannot construct my house without taking the loan, so it becomes directly attributable, and it has to be added in the value of asset if it meets the criteria. So moving towards like whether the criteria are getting met or not. First, whether it is directly attributable or not, that's something we have seen in AS 16 and AS 2. So here we are talking about borrowing cost can be added to the value of inventory as well as to the value of asset. Now what could be the borrowing cost as everybody was talking about? Borrowing cost could be the interest or any commitment charges we are paying. Generally the interest only. Right? Generally the interest only. So interest which we are paying is the cost which are addition to the borrowing which we are paying back to the lender. Right? So interest cost. But interest cost is not the only cost which we incur. Can we talk about some practical scenario where the interest other than interest cost could be there? For example, let's say amortization of ancillary cost relating to borrowing cost. What amortization of ancillary cost means? Let's assume you want to take a loan, right? You want to take a home loan for this. When you go to bank for home loan, bank says we will give you 1.5 crore. But for 1.5 crore there is a file charge or processing fees or bank charges. So file charge, processing fees, bank charges, let's assume that is 1%, which is 1.5 lakhs. So the 1.5 lakh which you have paid, that is also a borrowing cost which we are paying on top of the borrowings which we have acquired or which we have taken. Right? So my interest cost plus any file charges, processing fees, bank charges which we may have, that will also be added that will also be considered as borrowing cost. Any premium or discount on the borrowing, for example, let's say issue of debentures. So borrowing is actually the vast term, I would say. So borrowings, I am borrowing from anybody, right? Loan is a typically one type of borrowing, right? So interest cost, any bank charges, amortization of discount premium on borrowings. So for example, if I have issued debentures on discount, or if I am redeeming debentures on premium. So whatever discount or premium I have as an expense, which I am amortizing over the period, over the life of the debenture, over the maturity period of the debenture, that will also be considered as borrowing cost. So these two, rest of these two, we have not yet, you might not be knowing, right? If there is a lease and lease becomes a finance lease, like a hire purchase. If there is a lease like a hire purchase, when lease asset is taken on lease and asset will be treated as my asset. What I do, I charge interest on that. So that interest when asset become my asset will also be considered as borrowing cost. And at last, exchange difference. Now exchange difference, here we are talking about those differences which are arising. For example, I am getting loan from bank in UK, right? I am getting loan from bank in UK. I found in UK the interest rate is 3%, whereas bank in India is giving me interest or the loan at 9%. So what I did, I decided to go for interest rate of 3%, whereas in India rate is 9%. If in India rate is 9%, in UK rate is 3%, you may say that I will definitely go to UK and take the loan from there, that bank, right? I may have my establishment there, my branch there, so I have taken the entire loan there. Now the question is that if I have taken the loan there, because that is cheaper, 6% cheaper, I will definitely go and take that. But when I take the loan from UK, I got the loan in foreign currency, which is GBP, pound, British pound. When I have got that in the British pound, now what happens is that the British pound keeps on fluctuating as compared to Indian currency. So though I have got the interest at cheaper rate, but it is given me a risk. The risk is that value of GBP may go up, may go down. If the value of GBP goes up or down, it is going to add the exchange gain or loss on my financial statement. Now that exchange loss can also be considered as borrowing cost if that is related to the loan which is being taken for a particular asset. Right? I hope it is clear to everybody. Right? It is clear to everybody that how we are. Right? It is clear to everybody that how we are actually considering all these types of costs which are related to my borrowings as borrowing cost. All these costs will be treated as borrowing cost. So Muhammad Ali, amortization means, basically amortization means allocation of amount over the period. Means whatever cost is there, means if bank has charged you processing fees of let's say 1.5 lakh, loan is for 3 years. So 1.5 lakh is not the cost for year 1 because I have taken loan for 3 years. So 1.5 lakh is the cost for all 3 years. So I have to amortize over 3 years period, which is nothing but 50,000 every year. Right? That is the amortization. Amortization means allocation of the amount over the period. I hope borrowing costs are clear to everybody. Moving on to the next part. Now, which asset borrowing cost can be added? Yes, Harsh. GBP is British Pound, Great Britain Pound. That's what we call. So I have taken that in Great Britain Pound. When I have to pay back, let's assume I have taken the loan. That time the GBP was 1 GBP equals to 80 rupees. But at the time of payment or at the year end, that GBP rate has gone from 1 GBP 80 rupees to 1 GBP 100 rupees. So it means while paying back, I have to pay 20 rupees extra for every GBP. I have saved 6%, but I am paying additional 20 rupees extra back. So that 20 rupees, because that is related to the loan, will also be considered as borrowing cost. Right? We will discuss whether those exchange differences and everything will be added or not. Yes, it should be added, but to what extent? Right? Now, borrowing cost has to be added. Right? Borrowing cost has to be added. Right? So it says borrowing cost has to be added or can only be added when these are related to qualifying when asset is a qualifying asset, only then the borrowing cost will get added. Now, what is qualifying asset? Qualifying asset is the asset which takes substantial period of time to get ready for its intended use or sale. So it is the asset which takes substantial period of time. Right? Qualifying asset is the asset which takes substantial period of time. Please make a note of it. Any asset which is taking substantial period of time in its construction or development for its intended use or sale. Now, what exactly it means? What do you mean by substantial period of time? It says if an asset which is going to take at least substantial period generally is at least 12 months of time. If asset is already available for use, let me just give another example. Let's say I am buying a car. Car is going to cost me 10 lakh. I only have 2 lakhs with me. Right? I only have 2 lakhs with me. So it means rest of the 8 lakhs I will take in the loan. Now, can it be directly attributable expenses? Answer is yes, because 8 lakh I cannot afford the car if we don't have or if I don't take the loan. I need the loan, so 8 lakh is the loan which is directly related to my asset. But is this car a qualifying asset? Is this car a qualifying asset? Is car going to take more than 12 months in its manufacturing, in its construction? Can we say it is going to consider or going to take more than 12 months? Can it be considered as qualifying asset? So this car which we have bought is ready for use. So it is not a qualifying asset. When it is not a qualifying asset, interest will be charged to profit and loss account. Right? It is not a qualifying asset because it is ready for use when I bought it. I don't have to do anything after that. Right? I have not even given the order to manufacture it. So it is ready for use. So it will not be a qualifying asset. So I am just going to consider qualifying asset. Now qualifying asset means those qualifying asset which takes more than 12 months. Can you think about the examples? Can you think about certain examples which could be the asset taking more than 12 months in its construction or development? Right? Construction, development, manufacturing. Right? So when an asset is taking more than 12 months, it could be property, plant and equipment. It could be intangible asset. For example, let's say right now everybody is working on medicine for coronavirus. So they are developing, or they are in the process of developing the formula. Now if they take more than 12 months, then it will be a qualifying asset. If they take less than 12 months, it will not be considered as qualifying asset. Right? What else could be the qualifying asset? So PPE, intangible asset, even the inventory. Now can you think about the qualifying assets? What do we mean by qualifying? Means what could be the examples of qualifying asset? So examples of qualifying asset could be, let's say I am setting up a plant, building, software, very good Vrinda. Customized van for motel, if it takes more than 12 months, then its borrowing cost will be added. Harita, yes, of course, if that takes more than 12 months, but it will not necessarily be. Right? Manvi, Aditi, everybody has mentioned building, plant, Rushi, construction of ICAI one, definitely Rushi, yes. So all these things, so Shrungi has mentioned construction of house, factory, building, even the inventory. Which inventory do you think could be a qualifying asset? Right? So let's look at that also. Inventory, which could be considered as qualifying asset. Please answer this. Any inventory which you feel could be the qualifying asset, right? So I am talking about the other example here. Manufacturing plant, power generation facility, dams, right? Stadiums, inventories that require substantial period of time. Can you think about that? What are the inventories which takes more than 12 months in its construction? And investment property also. Right? These are certain examples, but there are a lot many examples as you have mentioned. It could be building, it could be software also. Right? Depending on that how much time we are considering. Which inventories? So when we talk about inventory, for example, DLF manufacturing or DLF is constructing apartments. So apartments are actually inventory for them. When apartments are actually the inventory for them, so these apartments, right, these apartments can be considered inventory and takes more than 1 year. So we will take, right Sakshi, I guess this is fine. So this apartment is going to be treated as the inventory, which will take more than 12 months qualifying. Other inventory could be wine, right? It could be wine, right? Pickles generally don't take more than 1 year, I won't say. The other could be if I'm making any other, if I'm in the, let's say I make, or maybe let's assume for company like Boeing, the Boeing which actually build aircrafts for Indigo, Air Asia, Emirates, everybody. So aircraft doesn't get manufactured or constructed in days. It takes years sometimes. Ships, right? A company which manufacture or which builds ships, that may also take years. So those will be considered as qualifying asset. So all these things which may take more than 12 months in its construction or development will be considered qualifying asset. But one thing they have mentioned, if you see, right? Vrinda perfume, again, right? So I would say any company which is, right? Yes, Deepak, that will be added, right? So some inventories which takes more than 12 months, but they are manufactured in large quantities and on repetitive basis. For example, right, though we have considered wines take more than 12 months, but standard has mentioned if entity is producing inventory in the large quantities and on repetitive basis, then in that case that can be scoped out. Scoped out means it will not be considered as qualifying asset. Now if I talk about wine, what happened with wine? Does company manufacture or the company which is producing wine, do they just produce once or do they keep producing every time, right? So generally these are considered in a large quantities on a repetitive basis over a short period of time. It means that on every day I am actually producing a lot which goes into the store. Now when we are producing a large quantities, and we are making on the repetitive basis, then in that case, wine companies specifically, because they are producing large quantities and repetitive basis. So wine, though it is taking more than 12 months, can still be moving out from here and will be considered out of scope for this particular topic. Why? Because we are making this on regular basis, repetitive basis, and in the large quantities. I hope everybody is okay with the concept of what is qualifying asset, what is not qualifying asset. Any asset which is purchased and it's ready for use will not be considered qualifying asset at all. Whereas any asset which takes more than 12 months in its construction or development will be considered qualifying asset, and we can consider that in this particular topic. Right? I hope borrowing cost and qualifying asset definition is clear to all, because these two definitions are very, very important for everyone to know. So what is borrowing cost? What is qualifying asset? So as we discussed, the substantial period of time. Janvi, you may say that every inventory which companies are producing are not produced in large quantities. If I just think about what DLF is doing. DLF is making apartments in a particular area. They may be making large quantity, but that large quantity is maximum 800 apartments, 1000 apartments. But it's not like that DLF is making 1000 apartment today and 1000 apartment tomorrow. It means they have get into the project. Those projects are done on not so regular intervals. Right? So that is the reason the apartments can be considered qualifying asset. Whereas wine, we can consider out of scope. Right? Because why they are saying not qualifying asset? Because they are doubtful what will happen if they have to add interest on those wines. Right? You have kept some wine today, you have kept some wine tomorrow. So you don't know which wine you have kept. So thing is that it becomes very difficult for you to add interest on each and every lot. That is the reason. Right? Whereas for the apartments, we actually add the interest on the project as a whole. Right? For example, DLF is making one project of the apartment here and one project is running somewhere else. So we know that these projects are different and we have taken the loan for these projects separately. I hope this is fine with everyone. The substantial period of time is 12 months. Right? So that's what I am coming on. Substantial period of time is 12 months every time. However, it says substantial period of time, ordinarily a 12-month period. But it says there could be a case when instead of 12 months you can consider a shorter period, maybe 11 months, or longer period, maybe 15 months or 16 months or 2 years. It all depending upon facts and circumstances that how management can justify that. Right? How management can justify that. For example, let's say a construction company has taken loan of 200 crore and interest rate is 10%. So every year interest is 20 crore, which is a very big amount. When interest is 20 crore and construction company has completed the project in 11 months, they may say that in 11 months our building is completed. Right? Our building is completed, but 20 crore is still a very, very big amount. So they want to justify for that For that, the shorter period, 11th month, can also be considered, right? Just in case I can justify that. In some cases, companies may say 8 months can also be justified. In some cases, 15 months can also not be justified. So it all depends at how management is looking at the finance cost, right? That would decide what is the justification they are taking for the period here. Generally, 99% cases we consider 12 months as the period for the addition of the borrowing cost in the value of, right? So in estimating the period, what we need to consider? We need to consider whether technologically and commercially all the things are getting ready or not. Right? So everything, right? So time of the construction or estimate time to complete is that the period from one point to other, end to end. Right? So that was about the qualifying asset and the borrowing cost. But it says which borrowing cost can be added to the asset value. So borrowing cost which are related to qualifying asset. Right? Borrowing costs which are related to qualifying asset can be added. Now, it says either I am involved in the acquisition of qualifying asset, either I am involved in the construction of the qualifying asset, either I am involved in the production of the qualifying asset. What exactly it means? Construction, right? Construction means I am constructing myself, right? For example, DLF is making apartments themselves. They are constructing the apartment. So for them, apartment would be qualifying asset. On the other hand, production, right? So DLF, this is the, I would say this is the production, or because it is the inventory, right? Or construction means I am constructing, let's say, house, or you can say a office building myself. When I am constructing the asset myself, it will be considered as qualifying asset for me. And borrowing cost related to that will be added in the value of asset. If I am producing the goods myself, inventory, then also it will be considered qualifying asset and borrowing cost will be added. Third, when I am acquiring, you may say acquiring means you may acquire the ready to use asset once asset is completed. But let's assume I have acquired an asset, right, or I have placed an order for an aircraft. This aircraft may take more than 12 months. So I have placed an order for the aircraft, and this aircraft may take more than 12 months. When this aircraft is going to take more than 12 months period, then then it will be means it will be considered qualifying asset and will be considered for this topic. We can add the borrowing cost if related, means if it will be treated as qualifying asset and borrowing cost related to that will be capitalized in the value of asset. Right? Either I am constructing myself, either I am producing myself, or I have given the order so that somebody else is producing on my behalf for me. That will also be added in the value of asset. So software development, yes, development of the software will also be considered here. So any of these activities, whether acquiring, constructing or producing, if it is related to qualifying asset, it will be capitalized. But if it is not related to qualifying asset, that will not be capitalized, that will be taken to the profit and loss account as an revenue expenditure. We will charge it off to profit and loss account. I hope this is okay with everyone, right? This is something which we have discussed, right? If we purchase Boeing which is already ready for use, right? If we have purchased the asset which is already ready for use, then in that case we are not going to, or we are going to consider as a not qualifying asset, right? If it is already ready for use, we are not going to consider this as an qualifying asset, and we will not charge or we will not add interest on that asset. The Priya cheese making thing is that it may not take, right? It may not take more than 12 months. That is the reason we will not consider this as an qualifying asset. Right. So guys, I'll just take 2 minutes break here and we'll join back again. Just allow me 2 minutes break here and I'll just join back again. Guys, so we were talking about the borrowing cost related to acquisition, construction and production. So anything related to acquisition, construction and production of qualifying asset will be added. If not related to qualifying asset, it will not be added. So Shrungi, you have mentioned that some cheese may take more than 12 months. If some cheese may take more than 12 months, then we have to see one thing which I have just mentioned, that whether I am making that in the large quantities and on repetitive basis. It's not like that I make the cheese today and wait for 12 months, only then I'll sell it. Right? So I will be making cheese every day and every day keep storing it for the 12 months. So means anything made today will be taken out exactly after 12 months from now. And anything will made tomorrow will be made after or will be taken out after 12 months plus 1 day, from that date. So it is always on the repetitive basis. While if the asset which we have taken is already ready for use, it doesn't matter how much time it has taken. Right? I am buying it today when it is ready for use. It is not a qualifying asset. It will be a qualifying asset when I am buying the asset, and that will take another 12 months from the date when I am buying the asset. Exactly, Sridhar. So if any customized car which may take more than 2 years, generally it will never happen. Right? Car may not take more than 2 years, but if it is taking, then yes, it can be added in the value of. Now the question comes up, when I take the loan, right? When I take the loan, so I just take one scenario here. I or DLF wants to construct the apartment, right? DLF wants to construct the apartment. DLF has taken loan of, so Dexina as per the requirement, right? As per the requirement here, wine which is made on repetitive basis in a large quantity should not be considered, right? It is a asset which is taking more than 12 months. But for standard purpose, as it is made in large quantities on repetitive basis, so we are not going to include. Right? So DLF has taken loan to construct the apartment. Loan apartment will take 3 years in its construction. DLF has taken loan for 5 years. Apartment will get completed in 3 years. DLF taken loan for 5 years. Now, for what period? For what period borrowing cost can be capitalized? For how long borrowing cost can be capitalized in this case? Can borrowing cost be capitalized for 5 years? Whereas apartment will be completed in 3 years, means all cost related to apartment is incurred within these 3 years only. Right? Yes, Sunanda. Bearer plant would also be a qualifying. So all costs related to apartment, right? All costs related to apartment are done or are incurred within the 3 period only. Now, for what period borrowing cost be capitalized? Is it for 3 years, which is the period of the construction of the apartment, or is it for 5 years, the period for which I have taken the loan? So for how long I should consider or add the borrowing cost in the asset value? Right? How I should add? If company are given the option, company will always choose 5 years. Why? Because their interest is not going into the asset value, or their interest is not going to the profit and loss account. So interest going into profit and loss account reduce my profit, which I don't want. Instead of reducing my profit, I can add it to the value of asset. Right? So that is the reason the borrowing cost comes into picture. So borrowing cost allowing you to push your expenses to the future period. Interest expenses. So for which period? Is it going to be added for 3 years? Is it going to be added for 5 years? So there was no clarity. If there is no clarity, then companies may follow 3 years or 5 years. For that purpose, AS 16 has given us guidance about the period also. AS 16 says which period we should consider while calculating while considering the borrowing cost for capitalization purpose. So the period which we are going to consider here would be, they have mentioned 3 things here. They says, let's first identify the start date of borrowing cost capitalization. They says, let's find out the start date of borrowing cost capitalization. If we find out the borrowing cost capitalization start date, it will be easy for us to understand what would be the period. So start date of borrowing cost capitalization, we also call it commencement date. We also call it commencement date. Then it says, if start date is known, what should be the date of completion, or what should be the date when we stop the borrowing cost capitalization? So I need to know the start date. I need to know the stop date. Stop date is known as date of cessation. Commencement is the beginning. Cessation is the end. The period between these two here, period between these two dates would be considered the period for the borrowing cost capitalization. So it has given us the start date, it has given us the stop date. So before moving on to the start and stop date, it has also mentioned, let's assume we have considered DLF estimated that they will take 3 years in construction. But because of some reason, construction is completed in 6 years. It means that during the construction period of 3 years, I might have stopped the work, I might have not be doing anything, right? So there also it become important to know that was there any halt in between? Was there any halt in between which we can call, was there any suspension? Suspension of the construction. If we allow everybody from start date to end date, right, then in that case, maybe companies might not be able to complete the project in time because of any reason. For that purpose, we need to see whether between these two dates which we have in this construction activity, were they having any period when construction was stopped, or I can say suspension. So borrowing cost is related to qualifying asset, and it will only be added to the asset when construction is in process. If there is a suspension, that suspension will not be considered, will not be added here, or will not be taken up here, and we will not add the borrowing cost related to suspension period in the value of asset. So let's look at what do we mean by commencement date, stop date, and any suspension period. And this is very, very important here to know when to start, when to stop, and when to suspend the borrowing cost. It says, yeah, Harsh, I was talking about that only. So Harika, rice should not be the qualifying asset. If they are taking it for longer period in its development, then it can be. But again, I follow the same concept. It's always be made in repetitive basis in large quantities, right? So we should not consider that. Now commencement, when we are going to start our capitalization. Now, as I mentioned, if you remember, there are certain rules, there are certain criteria which needs to be satisfied for any cost to be, or any borrowing cost to be added to the value of asset. What it says, when the asset is going to be treated, or when the date, which date would be considered as the date of commencement. It says date of commencement would be, I mentioned 3 things, 3 points, 3 criteria are there. If these 3 criteria are there, then we can say, my date of commencement, my start of the borrowing cost capitalization would begin. And what is that? When 3 criteria are satisfied. First criteria, expenditure on asset being incurred. Means company has spent some money on the asset. or company has started spending money on asset, right? The expenditure expenditure on asset being incurred. Second, the first one was expenditure for the acquisition, construction or production on the qualifying asset is being incurred. Second, borrowing cost is being incurred. Means I have already taken a loan and we are incurring interest expense or any borrowing cost. Now I just take an example here for better understanding. I have taken loan on 1st April 2019, purchased land for construction of building on 1st July 2019. Now my question is criteria 1 and criteria 2. When I have incurred the cost, when I have incurred the cost on the asset, or when I have started incurring the cost on the asset. When I have started incurring the cost on the asset, I have started incurring the cost on the asset on 1st July. Whereas the loan is taken on 1st April, so interest is getting incurred from 1st April. Right? So 1st July and 1st April. On which date both of these criteria are getting satisfied? Can we say on 1st April, I am incurring the borrowing cost and I have also incurred the expense? Answer is no, both the criteria are not met. So it means both the criteria are only met on 1st of July. So my date of the borrowing or date of borrowing cost commencement would be 1st of July, when both the criteria are satisfied. Then move on to the second one, or the third one, sorry. So first, I have incurred some expenses. Second, I have borrowing cost also. Third, activities which are required for construction are in progress. Right? It means I have taken loan on 1st April, purchased land for construction on building on 1st July, but construction started on 1st April 2020. Right? So what would be the date for this? 1st April, right? What would be the date we are going to consider when all three criteria are satisfied, right? That I am incurring my expenses also, I am incurring borrowing cost also, and at the same time my construction activities are also in progress. If I purchase the land and not starting the construction for the longer period, then 1st July would not be considered. Because in this case, I am waiting for next 9 months. So the construction is starting from 1st April. So my borrowing cost will start from 1st April 2020. I hope everyone is clear with this concept. Right? I hope everyone is clear with this concept because this is very important concept. If you don't know that which date you should choose, then you will end up charging the wrong borrowing cost in the asset value. So this is very, very important, right? When the construction started, when the borrowing cost has been incurred, and when the first expense has been. Hope this is fine with everybody. Okay, I'll change the scenario once again so that we can look at that if in exam different kind of issues can come. I have taken loan on 1st April, purchased land on 1st July, construction started on 1st April 2020. But before construction, architect was making the design, right? Was making the design. So architect has started making the design on 1st July 2019. And he has given me the design on 31st March 2020, and I have started my construction on 1st April 20. Now, which date should we consider? Which date should we consider? When my loan is there, when the construction means when the expense has been incurred, and the third, that activities are in progress. So in this case, the date which we are going to consider would be 1st July 2019, because the activities, so architect making design is also the activity of completing the activities which is involved in the construction. So 1st July 2019 would be considered as the date for the construction period. I hope everyone is okay. In 2020, why? Because construction only started from 1st April 2020. It means I purchased the land but not doing anything on that. Whereas 3 criteria are need to be satisfied, and all 3 criteria are required. Expenditure are being incurred, borrowing cost is being incurred, and activities are required for construction are in progress. So 1st July 2019 would be the date. Now I change the scenario again. Let's assume I have taken loan on 1st July, but construction started on 1st April. Right? I have taken loan on 1st July, but construction started on 1st April. Now, on which date all 3 criteria are getting satisfied? What would be the date when all 3 criteria are getting satisfied? Thanks, Satish. Right? The date when all 3 criteria are getting satisfied is again 1st July. Though the construction started, but I do not have loan. Right? I think Aman, you asked the question. I have just answered it. Right? I have just answered it. So what is going to happen? I guess Uma has, or why Uma Vaishnavi has asked very right question here. We have two periods. First April 2019. I am talking about the period where this was there. 2020 was there. So I have the period I have taken loan 1st April 19. So from 1st April 19 from 1st April 19 to 1st April 20, I am paying interest. Well, bank may say, can bank come and say that you are not doing any construction, so I will not charge you interest? Can they come and say this to me? Answer is no. Bank will still ask for the interest. And the loan still continue, and I am paying loan further 2020 onwards. So the interest which I am paying here will not be capitalized, but I am making the payment. So this interest will be taken to the profit and loss account. But this interest here, which is starting to be getting capitalized, will be added to. I hope everybody is okay with that. Shungi, exactly. So thing is, when activity started, the activity can start not directly from the construction. As I mentioned, the architect which is involved is also a part of the construction. Leveling of land is also a part of the construction. Exactly, if you have started leveling of the land from Jan 2020, then the start date, the date of commencement would be January 2020, not April 2020. I hope this is fine, right? And this is very important, because otherwise it becomes, right? It becomes issue, right? So it says, if these three criteria are satisfied, only then we will do that. However, if, let's assume, borrowing cost incurred while land acquired for building is held without any associate development, do not qualify for capitalization. I have acquired the land, but I am not doing anything, right? Then in that case, I can say that construction activity is not in progress. That was about the date of start. So before moving on to the end date, let's look at the period when it is suspended. So from start date, you can understand from commencement date criteria, you can understand capitalization of borrowing cost is only happening when activities are in progress. But what happened? Exactly, Rishabh. So it will be added in the value of asset, and then asset will get depreciated and it will hit my profit and loss. Okay. So capitalization of borrowing cost only happen when activities are in progress. But what to do when activities are suspended for some period? Now activities can get suspended for some period. Now there could be different reason for that, right? Now reason could be that construction company working on one project, right? Working on one project, they have got new project. Let's assume this is the government construction company, PWD. They have got one project to make one road. From government pressure, they have been asked to leave that road there and move to another road. So the road project which they were working on was put on hold. And it is restarted after 6 months. So it means that 6 months period is the gap. Payal, it is applicable to A16 also. It is applicable to intangible asset also, which I have mentioned that development of the software will also be part of it. Right? So it is restarted after 6 months. So what is the gap here? So gap here is 6 months. Gap here is 6 months. But my question is, will bank not charge the interest during this period? Can bank come and say that you are not working, so don't worry, we will not charge you interest for this? Can bank say this thing? Answer is no. Bank will still charge interest. Bank will still charge interest. If bank will still charge interest, it means my activities are not in progress, but bank is charging interest. So, in suspension period, my capitalization also get suspended for the gap. It means that during this period, my capitalization will not happen, interest will be charged to profit and loss account. Is that okay with everybody? During this period, interest will be charged to the profit and loss account. I believe commencement date and suspension period is fine with everybody. Right? Now moving further, in the suspension only, but suspension could be of various types. For example, the suspension period is planned suspension period. Right? I have already considered this as an planned suspension period, or I have already accounted for this. I knew that what is going to happen. For example, let's say sometimes project gets suspended as part of process. Project gets suspended as part of the process. Right? So I'll just so when there is a is also capitalization is not getting suspended. Right? When suspension is there, we have cleared. When suspension is there, my activities will stop and we are not going to add the value there. But suspension could be of different types. When suspension is the part of the process, for example, after finishing, right? So you know, after, let's say I am making the building, right? After finishing the lintel work, right? So if you know, let's assume I am constructing the dam. After dam is being built, right? After dam is built, right? I have to wait for 4 months so that everything gets dried, right? And I can start adding other elements to the dam. So I have to wait for 4 months, and that 4 months is part of the process. This is again suspension, but here suspension is a part of the process, is actually necessary, required. Right? It is necessary, required, and we are going to keep it on hold for some time because that is required. I cannot do anything. When I cannot do anything because that is the part of the process, suspension, or I would say capitalization, will not suspend. My suspension will be there, but my capitalization of the interest will keep on happening. It will not be suspended. Is that okay with everybody? If that is part of the process. Second, it could be the capitalization of borrowing cost is not normally suspended if any technical or admin work is being carried out. For example, after completing first floor, architect is designing, generally this doesn't happen, architect is designing the next floor map. So my suspension means my building work is on hold or suspended for some time, but during that time my technical or admin work is in progress. Right? My technical or admin work is in progress. Or I can say after completing or let's say after purchase of land, I have gone to court for their approval on construction. For their approval for construction on that particular land. When this is there, means after the land is purchased, but I am taking the approval, my admin work is in progress. So still the admin work is in progress, so capitalization will not stop or suspended. If the suspension is part of the process, I take one more example which is there in the standard. Let's assume you are making a bridge over the river. In rainy season, water level is high. So you have already decided in rainy season if water level would be high, you will not be able to work during that time. So in any case, you have to stop working there for 2 months period in the rainy season. So that is suspension where you cannot do anything. So your activities, your interest will not get suspended. I hope everyone is okay with that. Moving on to the last part, which is stop date. Or which we call cessation. When we cease to capitalize our borrowing cost. Cessation. So stop date means that date when all the substantial work is completed. When all the work substantially is completed, we can consider this as date of completion, even though the final touch-ups, for example, let's say for DLF, they are making buildings. Everything is completed, every work is completed, everything is been done. The only thing is some of the bathrooms in one of the apartment is still not been done, means paint work is not been done in one of the bathroom out of 1000 flats. So it says if if insignificant work is left, we can still consider asset is completed and we can stop capitalizing the borrowing cost. I hope this is fine. The issue comes up when assets are completed in parts. Right. So first let's understand the example here. Started construction on 1st April 2019. Loan taken 1st July 2019. Construction stopped or suspended for 2 months. So somebody has asked, so I'm just writing it. Because of pandemic. Right? And construction completed on 31st December 2020. Now thing is, we need to understand for what period we are going to capitalize the asset. From which date to which date capitalization would be done. So capitalization would start the commencement. Started construction 1st April, loan taken 1st July. So it starts from 1st July, end on 31st December. It means it is in total 18 months. But the 2 month suspension which is there, that 2 month suspension, no, Erika, bank will start charging interest from day one when they have given loan. So the suspension period for 2 months, which is there for the pandemic. So the pandemic, is it the part of the process? Answer is no. Are we able to do any admin work or any other work? Answer is no. So the pandemic period may not be capitalized. Right? The period of pandemic may not be considered suspension when I can continue adding the. So 18 months minus 2 months. That would be considered as my period. I hope this is fine. The issue comes up when assets are completed in parts. For example, let's say I am making a plant, right? A manufacturing plant. Or let's assume Maruti is making a manufacturing plant for their cars. So they have different units, unit A, B, C, right? Let's say body work, paint work, engine work, right? Accessories and quality. So these are 5 different assembly units they have made. 5 different assembly units they have, and these are made in 5 different parts. So Maruti has decided they will start with A. They will start with A and move to B after A is completed. They will move to C after B is completed, and so on up to E. Now, can Maruti use body work unit? Means, can Maruti use this plant without all the work, without all 5 units are completed? Can Maruti go and start the production without all these units are completed? You can say they can use, but what they will do if the body work is done, right? If the body work is done, means if the car body is ready, unless the paint work is there or engine is there, car cannot be completed. For that, we can say Maruti cannot use this. They can only use once all the assets are completed. Once all the units are completed. So what would be the start date? Start date would be the date when we started our work, which is, let's assume, 1st April 19. And the end date would be of the date when E unit is completed, which is 31st December 2021. Is that okay with all? So the period which we are going to consider for our construction for all these assets together, if I have taken loan of 100 crore on all the assets together on the plant itself, not separate units, on the plant itself, will be completed on 31st December or 31st December 2021. They cannot use the plant. Ankush, your query, middle of, let's say the work is done up to certain level and then you stop. So up to certain level, till the point the work is completed, we are going to capitalize the interest up to that level, right? Rest everything will not be done unless you start the work again, right? Okay, so Janvi, 14 months time period, suspension period is 4 months. Now time will be less than 12 months. Will it be qualifying asset? It all depends, Janvi, that what was the thought when we started our construction. It is not like that you add interest once the asset is completed. You start adding the interest once you know that how much time it is going to take. If in the beginning you knew that the period is 10 months only, 4 months just because the suspension happens, so it will not be qualifying asset. In the beginning you should know whether it is going to be a qualifying asset or not. Is that okay with everyone? So in this case, the period would be 1st April 19 to 31st December 2021, because all the units are part of the same asset. But let's think about DLF again. DLF is making office premise, or we can call business park. Priya, yes, generally the COVID phase which we are talking about should be expensed off instead of adding to the value of asset, because it doesn't meet the criteria, right? It doesn't meet the criteria which we can. Okay. DLF is making business park. They are making 5 towers. Tower A, B, C, B and E. Right? These are separate towers which they give on rent. Right? So these are the separate tower which they are going to give on rent. Now when these are separate towers, we can consider, right? So let's first look at DLF has planned this way. DLF will start construction with A, move to B after A is completed, move to C after B is completed, and so on. But in this case, once A is complete, DLF can use this asset and put this on rent. What does it mean in case of Maruti? The unit A which was produced was not of any use unless unit E is produced. Whereas in case of DLF, right? In case of DLF, unit A can be used even though the rest of the units are not being made available or not ready right now. So A is not dependent on B, C, D and E. For that purpose, the capitalization, the date of commencement of each and every unit would be different. For example, let's say so my asset started on 1st April 19. This was completed on, let's assume, 31st March 2020. This was started 1st April 20, completed 31st or 30th April 2021. This was started from 31st May 21 and completed on 30th June 22. So on. So the commencement date and cessation date in these cases for each and every unit would be different. Whereas in commencement date and cessation date, in Maruti case was this, and in this case for all the units it would be different. It means for every unit I'll start the commencement on different dates, and I'll stop capitalizing the interest cost on the date when the work is completed. Is everyone okay with the period which we are talking about here? The period, right? The period when my asset, right? Period when my period of capitalization of interest cost, which will be added in the value of, right? So we are clear with start and stop date, right? So when to start, when to stop, are we clear with the concept, right? So this is done. Now moving on to our next piece, which says types of borrowing cost. Here, from here onwards, the numbers will start. Types of borrowing cost. One is specific. Specific means I have taken loan for construction of hotel. So it means I have specifically taken loan for construction of the hotel, right? If I have taken loan for the construction of the hotel, this will be treated as specific loan and will be added to the value of asset. How do we do that? That's something we can understand with the help of example quickly and then move further on the illustration later. Let's assume I started construction of the hotel 1st April 19. Loan taken 1st April 19. Completed construction on 31st December 2021 or 2020. So what is the period here? 9 months and 12 months. So total period is 21 months. Interest rate, so loan which is being taken, right? Loan amount is 50 lakhs and interest rate is 10%. Now what would be the interest which will get capitalized? How much interest to be capitalized? What is the interest which we are going to consider here? So interest which we are going to consider here would be 50 lakh into 10%. 5 lakh is the interest, but I have to add it for 21 months. It means for this year I will add full 12 months. For next year I will add 9 months. The full 12 months loan is 5 lakh. For 9 months loan is 5 lakh into 9 divided by 12. So the total loan we can consider 8,75,000 interest cost which will be getting capitalized. Is everyone okay with this concept here? Is this okay with everyone? Right. So 8,75,000 is the capitalization cost. But let's assume the entire loan I have not consumed entire loan on 1st April 19. It means the loan which I have taken of 50 lakh, some amount would have been used on 1st April 19, some amount on 1st July 19, some amount December 19, some amount January 20, and so on. Hence means entire 50 lakh would have not been used for the construction on day one itself. So what does it mean? When this is not been used, the 50 lakh is not been used, I have invested this 50, which is giving me interest income of 30,000. If interest is getting capitalized, the interest income during that period should be deducted here, and my net value which will get capitalized is this. Is this okay with all? So in this case, if we have invested temporarily somewhere else, the investment may bring in some sort of income. That income will be deducted from the value of interest which has to be capitalized, right? But that would only be temporary. It should not be the loan amount. Specific cost. There is another borrowing is known as generic borrowing. Generic borrowing means, let me just show this thing. I am making the balance sheet here. I construct an asset. I want to construct an asset. That asset will require, let's assume 2 crore rupees in its construction. I want to construct my asset, a building. That building would require 2 crore rupees. Now this 2 crore rupees I can take from the loan outside, maybe from bank. But the issue is I already have so much of liability sitting on my books. 8% loan note, of 5 CR, 9% debentures of 10 CR, and other loans of 30 CR. Now I already have so much of loan, so I don't want to take any further loan. I feel that if I take any further loan, it will add another obligation to me. It will add to my balance sheet. My balance sheet will not look good. And I already have money with me, right, which I have already taken in these loans. So these loans are already there. So when I am not taking, so Kothari, I have taken this 30,000 as an hypothetical number that I have invested somewhere. 30,000 came to me. Let's assume that way. If that number is given to you in an exam, that you should follow that. Right. So coming back to this, I already have 3 loans with me, so I don't want to take any other loan. So when 3 loans are there, I want to construct the building. I am not taking any specific loan. So these loans which I already have become generic borrowing. and generic borrowing cost should also needs to be added to the value of asset. The borrowing cost related to the generic borrowing will also be added in the value of. Now you may say that why generic borrowing? Is generic borrowing, is this directly attributable? Is this directly attributable? Why generic borrowing will be added? I have not taken further loan. I am using the same loan. So why to add this generic borrowing there? So is this directly attributable? Answer is yes. But how? Let's assume I have money with which I am Payal, I'll just explain that after this, right? Give me 2 minutes, I'll explain that after. Let's assume I have money already with me, with which I will construct the asset. Means I am using the loan which I already have, I am constructing the asset. Now let's assume if I don't construct the asset, what can I do? I can pay off my loans. It means I can save the borrowing cost for the company. If I can save the borrowing cost for the company if I don't construct the asset, it means the borrowing cost which I am incurring now is actually directly attributable. So I found the relation between the generic borrowing as well as on the qualifying asset which is directly attributable in nature. So in this case, the cost which is related to the directly attributable expenses will also get. So before I move to further, there are a couple of people having the question. The temporary investment. So let's assume I have invested some portion. I have not consumed the full loan in the beginning. I have consumed only some portion. So rest of the portion I have invested somewhere, and that investment has given me 30,000 income. Right? For example, you have got the loan for build the house. You got the loan, you have kept that amount in your saving bank. Now that saving account will keep giving you the interest income also. You are paying the interest expense on the loan, but at the same time, because the money is sitting idle in your bank account, you will keep getting the interest income also. So this interest income of 30,000 will get deducted from the total loan interest expense, and the net amount will only be added in the value of asset. I hope this is fine. How directly attributable becomes, means how general borrowings becomes directly attributable, that we have seen. Now how much we can add here? How much we can add here, because I am taking the, or I am constructing the asset which needs 2 crore rupees, whereas loan is 5, 10 and 30 crores. The other loan is of, let's say, 10% interest. Now I need 2 crore, but I have the loan value of 45 crores. Which loan or which interest should be capitalized? Which interest should be capitalized? 8%, 9% or 10%? Which one do you think I will be capitalizing? Because there are different types of loan which are there. When we have general borrowings and we have multiple loans sitting in that, I cannot add a particular loan in this. So for that purpose, I need to find what should be the average rate of my borrowings. What should be the average rate of my borrowings? That average rate will be added to the value of asset. Now, what is the average rate in this case? We have different borrowings. The average rate comes by calculating total interest upon total loan multiplied by 100. So that interest rate will come by applying the formula total interest upon total loan into 100. So let's find out what is the total interest for this. So total interest for this is 8% into 5 crore. Which is 40 lakhs. Then we have 9% on 10 crores, which is 90 lakhs. And 10% on 30 crores, which is 3 crores. So my total interest which we have is total interest we have is 4 crore 30 lakhs. Now what is the total loan amount we have? So the total loan amount we have is 5 crore, 10 crore, 5 crore, 10 crore and 30 crore. So the total loan which we have is 45 crore, whereas total interest we have is 4 crore 30 lakhs. So what would be my interest rate? Interest rate which will be there is 4 crore 30 lakh total interest divided by total loan into 100. If we do that, I get my interest rate which is 9.6%. So this is the rate which we are going to use. Now what is my construction cost? My construction cost is 2 crore. So on that, if the period is, let's assume period is 12 months. So on that, my interest which will be capitalized would be 2 crore multiplied by 9.6% interest. So this will be capitalized in the value of. I hope this is fine with everybody. This is something which we do when we have generic borrowings, not specific borrowings. So I have to take the average. We need to consider average. So the construction period I have considered 12 months, right? So let's assume construction period was 12 months. That is the reason I have taken 12 months here. If construction period is, let's assume not 12 months, it is 15 months. Then it will be 15 divided by 12. Whatever the construction period would be, on that basis we are going to add the value. Right. I hope this is okay with all. So that was the question of generic borrowing. I have discussed the question of specific borrowing also. Let's look at the illustration where generic and specific both are mixed. When I have taken specific borrowing also, and at the same time I have some generic borrowing also. What to do in that case? That's something we'll look at here. So X Limited began construction of new building on 1st January. It obtained 1 lakh specific loan. So the loan of 1 lakh is a specific loan to finance the construction of the building, which is starting on 1st January 2016. Interest rate is 10%. The company's other outstanding loan is 5 lakh and 9 lakh. Right, 5 lakh and 9 lakh. And rate of interest is 11% as 13%. So first, we need to look at, there are two things which we have. So Rosalind, just to add here, the interest which we are paying, whatever interest you are paying, out of that, this will be capitalized in the value of asset. Rest everything you are paying will be charged out to profit and loss account. So this is illustration. I have specific borrowing, which is 1 lakh. I have general borrowings, which is 5 lakh and 9 lakh. So total 14 lakh. The interest rate here is 10%. The interest rate here is 11% and 13%. Right, 11% and 13%. Now let's look at what is the amount which we have spent. The amount which we have spent. The amount which we have spent, it says the expenditure is not being done on so Payal, we have not changed the interest period. We have just calculated the interest to be capitalized. That's it. Okay. So the amount which we have spent, I have not spent the entire amount on day 1. I have spent amount on January, April, July, and December. So January, April, July and December. So how much amount we have spent? 2 lakh 250, 2 lakh 250 and 450 and 120. So we have spent these much amount. Now thing is, when I have spent something in December, do I need to charge the interest for full year? Answer is no. I will charge interest on this only for 1 month. If I spend amount on July, I will charge interest on this only for 6 months. So it means I am going to consider the values or the interest on the basis of the period which is being considered for this construction. So this is for 12 months from January to December. This is for 9 months. This is for 6 months and this is for 1 month. So it means the amount which I have to consider here would be 2 lakh into 12 by 12 2,50,000 into 9 by 12, 450 into 6 by 12, and 120 to 1 by 12. Why I am doing that? I am just taking the weightage of everything. Right? If I do total, I get 6,22,500. This is the weighted average amount spent which we have. This is the total cost which I have considered in the average basis. I hope this is fine with everybody. Now this 622 which I have spent is funded from, this 622 is funded from two parts. So total cost 622, whereas how much we have considered from specific and general. From specific we have taken 1 lakh. From general we have taken 622 minus so 622 minus 1 lakh. I hope this is okay with everyone. Right? So for specific we take 1 lakh, for generic we take 522, which is the rest of the amount. Now the question comes up, what is the interest? Now interest on specific is getting charged on the loan we have taken specific. How much specific loan was there? 1 lakh rupees. So 1 lakh into 10% will be considered straight away as the total borrowings, total borrowing cost on the specific loan. Why less than 12 months? It started on 1st January and ending up on 31st December. It is not less than 12 months. Right? So interest specific is 10% which we have taken. But what about generic? How much interest rate we are going to use? Do we have the interest rate? Answer is no, because two interest rates are given, 11% and 3%. If two interest rates are given, what to do? I find out the average rate. An average rate we find out using total interest upon total borrowings. So let's first look at what is the interest rate of 5 lakh. 5 lakh into 11%. And what is the interest rate on 9 lakh? 9 lakh into 13%. So the total borrowing, total interest is 1,72,000, whereas total borrowing is 5 lakh plus 9 lakh, which is 14 lakh. So my average rate here would be 172 divided by 14 lakh into, so my interest rate is 12.29. Very good, Rahul. Right? So average rate is 12.29. This 12.29 will be added or charged to here. And my borrowing cost related to this is 64,215. Now what is the total cost? Total borrowing cost to be added. To be added would be specific interest rate, specific interest and general borrowing interest. 74215 would be my borrowing cost. Right? Would be of this amount. So the difference here is in specific borrowing cost. We do not bother when and how much amount we have spent. If I have taken a loan of 1 crore, I will add interest of 1 crore. Doesn't matter if I have just incurred or just spent 50 lakhs out of that. So 1 crore interest will be added minus the temporary investment income which can be there. Whereas on generic borrowing, I cannot capitalize interest on the entire amount. So I take the interest only on the amount which is spent. So we have taken specific loan first, not the generic loan. This is the specific loan, then rest is the generic loan. Right? How we have taken the period year, average period year? Average period, if I have spent something in January, it means that amount which I have spent, I am utilizing that amount for full 12 months. So it means this amount was spent on January. So if I am using this amount from the loan, I have to take the interest period for 12 months whole. If this amount is being used in April, it means only 9 months being used. If this is in July, only 6 months is used. That is how we calculate the. I hope I have made it clear to all, right? In case you have any doubt, anything, we can discuss it tomorrow. We'll continue from here tomorrow. And any question, please do bring back the questions. Right? So, in case you have any query, we can discuss all these queries tomorrow. Thanks a lot, guys. Thank you very much.